Okay, so let's take a look at an example of identifying the rules of engaging, how to get into the trade. So once again, these are the five steps we have to follow. The first one being you find a higher time frame market bias, right? So where is the market? Where's price moving towards right now? Is it going from top to bottom or bottom to top? Is it bearish? Is it bullish? Right? And then the next thing is we will then follow all these next rules. Right? So the first thing really is when we look at, so let's assume we approach the market here, and the date on this is 1st of May, right? So this is just a couple of days ago, right? We can clearly see that the last move here, remember our move is this high. So let's identify that. So that's the last high that has led to a low that in that process broke the structure, also broke this one, right? And as well has broken this, right? So that's what we have noticed, right? So our move is this bearish move here. That's this bearish move down here. Okay. So we've established that the market bias is that. So now we will wait for a setup to happen. So we will then wait for price to play out. Let's see price play out. So it just keeps going, keeps going. By the way, what we want to also find is, remember, we're looking from this high to this low, right? So we want to remind ourselves, if this is a bearish move, we're looking for a sell trade. If we're looking for a sell trade, we're looking for it in a premium. So where is premium? Above 50. So as long as price moves above 50% of that move, we are comfortable. So right now you can see price has now moved above 50. So somewhere above here is our premium area. And that's the area we are interested in, expecting price to start going down. My preference would be somewhere around the sweet spot, right? Is the area where we want to see potentially price start going down, right? And so once price gets to, this kind of area, right? Once it gets to this kind of area, we now know that this is an area we want to start watching price. So remember, it is a bearish move that has broken structure and it has now pulled back into a reversal area, an area of premium. It's at this point we then drop down to 1 minute time frame. So in this case, I'm using 1 minute time frame as my execution time frame. You can use 5 minutes and so on. But in this area here now, you can see what we want to then wait for is a confirmation that price is willing to start coming down, right? And so one of the first things that we want to see is that price will start to give us some liquidity build up. So you can see what I mean by liquidity build up is when price, you know, normally if price is going up, is doing this, just breaking the highs, respecting the lows, right? So all the lows are respected, price is not coming below, it's only breaking the high. Now, when you start to see liquidity build up, which is number two of our action, of our process of entry, is you see things like this. Price takes that high, comes back, takes the low, comes back, just goes around, takes the high, right? So it's just doing that, is ranging, right? So this is actually build up of orders. It's a build up of liquidity. Then suddenly it breaks out of either the high or breaks down to this low, but then it gives us a clean break above that, and maybe can even do this. And this is now the final move, right? That we're now waiting to take an action from. All right, I hope that kind of makes it clear. Let's do this. Okay, so we have now seen price break above this. Remember, we're trying to wait for when price shows us it's ready to start going down. So I'm ignoring all these bullish, relevant moves. I'm looking for my bearish relevant move somewhere around this area. right? Preferably, I want to see price take out this low here. So price is doing what it's doing. You can see still liquidity buildup is taking out highs, right? So fake out. Can you see what's happening? It is still doing that, right? So at this kind of time where price has actually broken out of that zone, I want to also keep my eye on the higher time frame to just make sure that price has not taken the high of that my higher time frame, which will invalidate my bearish move. So this is the highest point there. So price now has come over here. Now, do you notice what price has done? So this was the sweet spot, but what price did was price came to the final supply zone there. So that's a POI still. So there was still one left there. So this is where price came in. So I'm just going to, since price has broken this, I'm going to remove this and then I'm going to drop that. Can you see how I've avoided getting into a trade too early, right? Because I waited for that confirmation. So down here now at the my execution time frame, what are we seeing again? So we can still see price takes this high, then price takes this low, some form of um, um, price build up, so order build up. But then what price has also given me is the first indication. So if we go back to our entry rules, where oh, I deleted entry rules mistakenly. I think okay, no, it's there. So order on liquidity build up. Can you see? That's what I'm looking for now. I'm looking for order on liquidity build up. I'm looking for a manipulation or liquidity sweep. So if I go back to that, remember I'm looking to sell. So I'm looking for all these sort of things happening. So I'm looking for price doing what is sort of thing is done here. So it has actually swept this high. And the moment it swept that high, can you see swept the high? Let's kind of zoom this up a bit. Yeah, so price swept that high and then came all the way down and took this low, right? So I can now see that this is potentially a move I want to follow, right? So now I have a move, bearish move, which is in line with the higher time frame now. So let's go. So right now, what is price? So price down went from high to low. It broke structure. So where is my sweet spot here now? And the potential price is actually coming to this fair value gap here. There's this fair value gap here, which is an area of reversal. And let's just see where our premium is so that we're getting in on the trade at premium. Okay, so price just touched premium, did not quite get above premium. Nothing wrong with that. As long as it's got to 50, it's got to 50. But I prefer for price to come up a bit. So let's see if that is the case. Yes, it did. And then what does it do? Actually, it takes this high again, which is insane. Can you see still liquidity build up, right? So it went quick over here. Now, by the way, I would have potentially had gotten in around here, right? Then my stop loss, I like to give myself between 5 and 10 pips, right? So let's have this probably around this area here, 7 pips, right? So that would have been is this trade might have scared me, but still not taking my stop loss out. But then price to go down, right? And I'll show you two things here. So straight away we already, if we're on a trade, then 221 is down there, 321 is here, right? So that's 321, right? So if we entered here, if this was our entry and we placed our stop loss here, would have been taken out on that trade. But then the price got there and gave us another bearish move. So that was another potential to entry, right? But I'm still in that first trade, just giving you an example of what could have happened. So you can see that second move. So this was the liquidity build up, including this. The price just went up, gave us that bearish move, relevant move that broke structure. Then it came back into premium, and now it is coming down. So let's see whether it sustains the bearish move. You see, still threatening my stop loss. You see, that's crazy stuff, right? Nice ahead. So it's going up and down. Your stop loss is still respected. Still is trade. Nothing is happening. Let's take out this Fibonacci so that we are right. So the question is, do we hit take profit in the end? So can you see how price just keeps dancing around? Don't mess with your stop loss. Leave it where it is. But now price is giving us some commitment. So it's taking out this low. So okay, from this high that led to this low that took out the structure here. So we are kind of confident that it's starting to move. Let's see what I guess to 3-1. But right now it has gotten to 2-1. So if you are going to take a 2-1 profit, you've just taken it now. So 2-1 was here. So 2-1 down. And typically when I do like 2-1 like this, I'm moving my stop loss to break even because yeah, or moving it, reducing my risk, right? But let's see whether this gets to 3-1 in the end. Yes, it did. So that's the example there. You get 3-1, right? So sometime during the trade, the stop loss was threatened, but you never got taken out, maintained it. And the other thing you could also have done is gone back to this area here to just make sure you had enough cover. So that stop loss, you can see that stop loss needed to make sure that you had um, this cover actually. Let's see. Yeah, so we had the cover, right? And we could have even gone stop loss this way here, which is still within 11 pips. But let's see whether we definitely got 2-1, right? But let's see whether we got 3-1, even at extending the stop loss to that level there. Let's go. Where's 3-1? Let's get 3-1. Yeah. Oh yeah, we did. We got to 3-1 before price moved up. Yeah, so there was 3-1 before price moved up. So we will take this back and just get to this point first. So there was 3-1 before price then and turned back. So either way, there was this was a profitable trade following all the rules, right? Right. So if we go back here, go back to and we can see how it all played out. Market bias we know is bearish. Order liquidity build up, we dropped onto this water. So we waited for price to come back all the way into an area of reversal on the higher time frame relevant move, right? So that gives us a higher probability of it working, not a guarantee, but a higher probability of it happening. And then we now looked for manipulation or liquidity sweep. There were few of those of the liquidity sweep. So this was the first one we got into, but then there was this other one that was even major that still gave us a sweep, and then a relevant move that broke the structure. Price pulled back into it, entry there, stop loss above there. That would have even been a better stop loss. But either way, you can see that price was ready to now start heading down. And then you got a relevant move, point of interest, pull back to point of interest, and then yeah. So I wanted this to be a quick video, so don't want to make it long. If you have any questions, please do come back to us. All right, you take care now. Cheers.